What's going to happen to the housing market in 2022? That's the question on everybody's mind as 2021 recently came to an end and set some records in the housing market. So let's start the conversation by talking about inventory. It's basic economics and basic supply and demand. If you look at the numbers between December of 2020 and December of 2021, there was an approximately 27% drop in available inventory nationally and almost 28% here in California. If we look at Orange County specifically as we move into 2022, there's approximately 1,100 homes for sale right now in Orange County. Whereas if we look at the peak inventory years in relatively recent history, at 2019 we peaked at about 6,000 homes for sale, which means inventory today is approximately 1/5 of what it was in 2019. And as we enter the year, that's creating incredible competition among buyers for the available properties. So let's talk a little bit about mortgage rates because that seems to be the topic that's on top of everybody's mind right now. I mean, where are these rates going to go? Rates have been at historic lows now for a couple years. We saw rates dip well below 3% last year, and moving into 2022, we've already seen a small increase in the rates. Most experts are predicting that by the end of 2022, we're probably going to see rates in the 3.7 to 4% range. And although that'll be a slight increase over what they've been, it'll still be historically low based on where interest rates have been over the last 5, 10, 15, 20 years. The real question is, how will this impact the real estate market? Will it impact prices? Will it impact buyers' ability to purchase homes? Will it impact purchasing power? And how will the reduced rates of inventory negate any increases in the interest rates that we see? You see, the underlying factor here is even if rates go up a little bit, we don't anticipate it's going to have too much impact on buyer demand and or home prices because it's not significant enough to impact purchasing power that much. Now let's talk a little bit about showings because this is really one of the primary indicators of buyer demand. And so far in 2022, we are off to a record year. You can see between 2020 and 2021, showings increased approximately 12%. But if you look at the graph behind me, you can see since 2018, the showing numbers have almost doubled, and they're expected to continue on that trend moving into 2022. Well, why is that? Well, there's still incredible buyer demand. There's still a lot of people competing for a small number of properties. And already across our listings at the start of this year, we've seen an incredible response. Every time we put a property on the market, we are literally overrun with showing requests in a matter of days. So buyer demand is still incredibly strong, and that's projected to continue well into 2022 and beyond. Now let's talk a little bit about appreciation and prices. Where are home prices going to go this year? Well, if we look at the numbers last year, we saw an approximate 18% year-over-year increase in the price of housing across the United States. Now, it was different in some markets with higher demand saw numbers over 20% and even higher. Some markets were lower, but the average across the country was 18%. I think everybody agrees that we can't continue on this 18% trajectory forever, and most leading economists are projecting somewhere between 3 and 10% in California over the next year or so. Historically, over the last 20 years, we've seen a 4.5% increase in the price of homes. So we're still trending well above the recent averages, but it's probably going to come down a little bit from the historic numbers that we saw last year. Now, one of the main factors in this discussion is the chronic shortage of homes that we're experiencing in this country. In fact, Realtor.com recently did a study and said we're as short as many as 5.24 million homes in the United States. And that number is actually up from 3.84 million in 2019. Now, interestingly enough, housing starts are at an all-time high this year in 2022 at about 1.65 million. And we haven't seen this number of housing starts since the early 2000s when home builders average about 1.5 million housing starts per year. Now, what I think is interesting about this is NAR has estimated that even if home builders were to increase production to 2 million homes per year, it would still take 10 years to make up the shortage of available housing in this country. And that's one of the reasons why we really think home prices are going to continue to rise year by year by year, because we have a huge supply and demand problem when it comes to available homes in this country right now. So what do we see happening in the housing market in 2022? Well, in a nutshell, we think it's going to be another strong year for housing. You can expect interest rates to go up slightly, but it's probably not going to affect buyer demand that much. You can expect home prices to appreciate, not at the historic levels we saw last year, but still at very meaningful levels. We still have a shortage of available inventory, which will probably continue throughout most of the year. And underlying all this is a severe shortage of housing across the country. So all these factors considered, we believe 2022 is going to be another strong year for housing. For more real estate news you can use, remember to like, comment below, and subscribe to our channel.